What's going on, guys? Mike here, and in today's video we're going to be looking over the earnings report on Plaza REIT. Now, if you are new to this channel, definitely check out this video over here because this is kind of the introduction into Plaza REIT. It went over into the details of what it is, and specifically this video we're just going to be looking at the earnings report. So let's get right into it. So just to kind of start things off with, I kind of just wanted to point out that obviously Plaza REIT has been on the decline, right? Since March, we've gone down 17%, and year to date being -8%. So when I did the original video earlier this year, we were at around a 6% annual dividend, whereas now you can see we're closer to 7% because we've gone from roughly around that $4.80 a share down to $4 a share. So again, just to kind of compare again a little bit to last year, this is kind of where bottom was for Plaza REIT in 2022. So let's hope it doesn't go any lower than that. But they have done some things that that has contributed to this kind of downward trend, and I'll kind of get into that a little bit here. So like I said, year to date we're at -8% with around a 7% annual dividend. So depending on when you bought in, that will obviously differ, but. So just kind of getting right into the financials, you'll see here in the revenue section, we are seeing that upward trend still of revenue, which is super important, right? We want to make sure that we continuously are growing the rental income. And each year, like I said, it's gone from 26 to 27 to $28 million each year. So that is definitely important to note, right? So kind of moving forward, obviously the funds from operation has been actually on a decline. It's the lowest it's been in the last 3 years, being at 9.3 million compared to last March being at 10.1 million. So obviously factors that are contributing to this is higher interest rates on variable mortgages, higher expenses on staffing, because of course with inflation going so high, admin fees are definitely going up, and so on and so forth, right? So everything in this environment isn't necessarily contributing to a positive aspect. Now, when I did review the payout ratio in last video, we were, I think, just below 70% at the end of 2022. And you can see in this one, we are sitting at, where is it here? Just losing it, 79%. So it's definitely increased, right? We had a little bit of lower earnings with the higher costs of just doing business. And now we're at 70, just below 80% payout. So again, this is kind of why in my other video with Smart Centers, I'm concerned about their particular dividend, because they were at 98% leading into this year. So those are all things to just kind of recognize. I don't necessarily feel that there's anything concerning in regards to the dividend payout of anything like that, but we are on the increased trend. Now, obviously the stock price has been coming down, but property values have been coming down due to the high interest rate. So this is expected, okay? As an investor, this is the trend that you would expect in real estate currently. And also, it's not like Plaza REIT is going down and all the rest of the REITs are going up, right? The whole industry is coming down. So if you are invested into Plaza REIT, this is something to just be aware of. You need to hold on to this and ride out the volatility. Again, I'm not a professional. You got to do what you got to do, but that's what I'm doing. I'm holding on to it. So just to kind of another thing, just to kind of point out as just a reminder, is that in this last quarter they did do a $40 million equity deal with one of the banks. I can't remember which bank it was, but it did obviously, like, they sold off some equity. So it did decrease the value of the stock as well, which is contributing to the decline since March. But what they did do is they lowered their debt ratio from 56% down to 52%, which they are saying that this is kind of the building blocks as to what they're planning on doing over the next 2 years to sustain that dividend and to grow the capital stock back up. So again, as a shareholder, I'm just kind of sitting tight. I'm not necessarily planning on selling. I'm just kind of playing the long game. And I think they did say, yeah, 2 years. This is kind of, they have a plan for the next 2 years to grow the REIT. So yeah, so that's kind of that. So like I said, the exact earnings report isn't necessarily all good news, with the dividend payout going up, but it's not necessarily all bad news either. They are well positioned. They do have a lot of buffer still within their payout ratio. They also, I just wanted to show as well really quick here, for their long-term mortgage maturities. You can see here in 2023, they have mortgages with 5.1 as interest rates that will be maturing. Next year, they're in that 4.35, and then the year after, being 2025, being around that 4%. So the positive in this aspect is that we don't have like mortgages that are maturing that are in like the 1s or the 2 percentile. So that will be a benefit, right? So the mortgages that are expiring typically are actually a bit higher than what's going on right now, or kind of right around the average that these particular REITs will be able to obtain. So that's positive news in knowing that we probably won't see too much of an increase in ongoing business operational costs. So just kind of take note of that. But anyways, I hope you found this informative. This was just meant to be a quick video to kind of quickly discuss the earnings report, and I'll catch you guys next time. We'll see you later.